What's up everyone? Welcome back, and if it's your first time here, I hope you stick around. So today what we're going to do is we're going to go through the markets, do a weekly recap, see what the price action's telling us, what are the key levels, see if there's any bullish or bearish edge on the charts. We did have a lot of economic data last week, and we had a huge rally with some follow through. So let's see what's going on. Take a look at the 4 hour, the daily, and the weekly. So let's hop on in. So it's looking like on Friday, the S&P finished up 0.94%. The Nasdaq finished up 1.88%, the Russell finished up 0.79%, and the Dow finished up 0.10%. So looking at the S&P from Friday, you did see follow through on your bullish kicker pattern, validating this Japanese reversal candlestick pattern. I do think you will see the upside of this range here at the pattern completion zone of this bearish shark, which then you'd expect to see a pullback, maybe potentially putting in another higher low and reversing back to the upside. If not, you could break these levels. If you do, you will see the upside of this range here at 42.36. But looking at the S&P on the weekly, you have some nice statement candles going on, invalidating this inside trading potential bearish harami candlestick from last week with a beautiful price markup this week, with your continuation of your bullish divergence, with your first impressions on the weekly MACD, getting out of neutral on your RSI, and you could potentially be working on another wave structure. This could be the actual big one that nobody sees coming. Keep it at a 786 first stop. Next stop will be an 886. But first you got to break B to make this even possible. Kind of keep that in mind as we're going through. So a couple things need to happen first. Break the supply line, get back above this potential B anchor. Let's see if there's any follow through on this bullish divergence from one low to the following low, and let's see if we can get back in the bullish control zone on the weekly S&P. So looking at the Dow Jones on the daily from last Friday, you actually got back above this level of inflection and had a candle close still back above after market participants sold prices off, buyers stepped back in and had prices, traders settled up above this level of inflection, and it back tested it now as support. Let's see it hold on Monday and look for follow through to the upside. Back above this level for long enough, you will see the upside of this range, 35.93. Positive momentum continuing to build on your MACD. You are in the bullish control zone on your RSI. No bearish edge as of yet. Slightly oversold, but you have broken out. You have confirmed this as support for now. So let's watch for some follow through on Monday. Dow Jones on the weekly, another potential wave structure that I don't think anybody will see coming, but break B point, this becomes a lot more realistic. But until then, just kind of keep that in the back of your mind. So what are you doing though? You have this bullish divergence playing out. You're on your third week of increasing positive momentum on your MACD. You are in the bullish control zone. You did have bullish divergence on both oscillators. You've broken out of your downsloping parallel channel. You're back above this level of inflection. You see traders settled up just outside of this level of inflection. Beautiful. Let's see some more follow through. Let's not get rejected here, and that potential bearish Gartley could be in play where you do see the 886. So we've been watching the Russell for a few weeks now, and congratulations, you finally did it. You've hit target one of this breakout from the supply with your double bottom from your bullish divergence on your MACD. You are still back above your 200 simple moving average. Traders taking profit at a profit taking level, sure, but let's see if we can get some continuation and hit target 2, which would also be another level of inflection. Get back above this level here, stay above it long enough, you'll see the next level up at 2013. positive momentum continuing to build on your MACD. You are in the bullish control zone on your RSI. Well, looking at the weekly, you have this beautiful bullish divergence on your MACD, bullish divergence on your RSI, out of the neutral zone, positive momentum continuing to build. You are back above the 200 simple moving average. You are at a potential reversal zone at the supply line. Let's see if we can break this and hit target 1 for the weekly new breakout potential. This is what I'm definitely watching. Profit taking level will be the 618 from your previous swing high to swing low. Continuing on, if you want to target 2, it'll be your 786, but being so close to the level of reflection, you'll most likely want to be taking profits at 2318 around this zone here. Taking a look at the Nasdaq on the daily. So we did have this bearish divergence usher in a small sell-off, which happened to make what? Another higher low. Beautiful. What happened off that higher low? We did get a bullish kicker Japanese reversal candle with follow through on the daily, but we happen to be butting up against the supply line from this downsloping parallel channel. And if you've been watching the show, you understand what happens when you are at the supply line in a downsloping parallel channel. You are technically overbought, but what's happening additionally is you have this bullish divergence on your RSI. Positive momentum is continuing to build. You are in the bullish control zone. On Monday of next week, well, early next week, I'd like to see a breakout of this supply zone and back test this level of inflection at 11,915. But keep in mind, you are at an area where you potentially could reverse. However, on the weekly for the Nasdaq, I am leaning a little bit more bullish just based on both oscillators showing this beautiful bullish divergence, also hitting this parabolic trend line here from the curved tool. What did you do? You back tested it once, back tested it twice, back tested it 3 times, rallied back above your 200 simple moving average on the weekly. First level of positive momentum impressions now happening, approaching neutral. We need to get back above neutral, get into the bullish control zone, see some follow through from this weekly candle, and ideally you could take a shot here because this is technically a low risk area as you are oversold with triple bullish divergence on your MACD, bullish divergence on your RSI, hitting a trend line going back from March of 2009. One could reasonably take a shot here with a stop loss marginally below 10,236, and your first target would be this level of inflection. Get back above this level of inflection. Between these is straight up, straight down. So that's what we're looking for. I am leaning more bullish on the Nasdaq just based on these indicators here. You're at a historical support with bullish divergence on both oscillators. Nice. Taking a look at the dollar on the daily. Well. Back at it again. We've been here. We've been watching the dollar. Are you surprised if you've been watching the show? You shouldn't be. Negative momentum continuing to build. Still in the bearish control zone on your RSI. Breaking a level of inflection where between this straight up, straight down, straight up. Why not straight down? Test the 200 simple moving average. We also measured out from this 3 falling peaks. The measured move is measured from your second valley to the top of your range, measured from the break of your second valley here, brings you back down to this level of inflection, and your 200 simple moving average. Sure, you may bounce around here, zigzag, back test, and continue down, or you flush straight down to the bottom of the range. We'll have to see what next week brings in, but if this is going to perform, this is where you're looking for, to exit your position if you are short the dollar. Looking at the weekly on the dollar, not surprised. We've been talking about this for about 3 weeks now. What happens when you're at the top of the range in a parallel channel? Technically, you're overbought. You have triple bearish divergence on your MACD, triple bearish divergence on your RSI, and we did see price action follow through to the downside, breaking key levels. You are probably headed down to the heart line of this channel. Break the heart line and this level of inflection, you could see lower prices in time, but we'll have to see, one level at a time. All right, taking a look at the VIX on the daily. So we've been calling this out when we bearishly back tested this level of inflection on October 20th. We've been talking about this, and in between these two range, straight up, straight down. What happened when you got straight back down? You bearishly back tested the 200 simple moving average once, twice, 3 times, now a 4th time, and after the 4th time, you broke the demand line with follow through. You're likely to see this gap fill in time from the demand line dating back from August, but the bigger demand line that we have plotted here dates back from June 2021, and you are now breaking back below this support. Let's see this gap close, then we'll talk again. You have negative momentum building on your MACD. You are in the bearish control zone. You could come back, bearishly back test this demand line and resume price action to the downside. We'll have to see what next week brings, but just be aware of your key levels and what's going on. You're below the 200, back below the demand line from June of 2021. Very bad for the VIX if you're trying to go long on the VIX. So looking at USOIL on the daily, we did have this bearish divergence from your one high to your same high, lower levels of positive momentum. And what happened? You ushered in a small sell-off. And what did you do? You put in a higher low. You still haven't gotten back above, I think, this key level here. Get back above 90.70. Make a higher high than these previous 2 peaks. And we'll be back in business. You are just about neutral. Negative momentum is beginning to wane. And I do think the story is more telling on the 4-hour, where we have this really clear inverse head and shoulders. Now we're making higher lows. We're still back above the 200 simple moving average. And what you want to do is get back above the neckline. So we've been watching this. Get back above the neckline, get back above 90.70, and get back above these 2 peaks. And you'll likely see the top of the range here, which would be the measured move of this inverse head and shoulder. Taking a look at gold on the daily. Congratulations, you did it. You broke the supply line while everything else was rallying. Gold's finally playing along. Welcome to the party. You're back within this level of inflection. You broke out, back tested it as support, and rallied again. You'll likely see the top of this level of inflection plus the 200 simple moving average. Get back above that. You'll likely see 1833. And I think what nobody's expecting, if this continues, is on the weekly. Because look what you're doing. You have all of this bullish divergence with your first impression of positive momentum on your MACD, getting out of the neutral zone on the weekly, and break the B point of this potential bearish shark. You could see the 886. A full retest could be in play for gold if this is what's happening. We'll have to watch for follow through, but I guess this is the move nobody's expecting. Just a potential wave structure. We'll have to see. This becomes more real when you break B and you're coming upon it. You're back above the 200 on the weekly. Bullish divergence, getting back into the level of inflection. Curious developments for sure. Let's look for follow through. So silver on the daily, we've been talking about this for a while, is it looks like you have clear accumulation from a low, a higher low, a higher low, your hidden bullish divergence, your up thrust in price, back above the 200 moving average on the daily, back above this level of inflection between this range. Typically it is straight up, straight down, straight up, straight down, straight up, straight down, straight up, straight down, straight up, straight down. Why not straight up again to 2291? We'll have to see if price can stay back above 2168 long enough to make it to the top of the range. But very good things are happening. You have bullish convergence from one high to the next. You have higher levels of positive momentum from your previous high. Wonderful. Let's watch for more follow through. I'm very excited for next week. Let's see what we get. So we've been watching ARK for a while, and we were talking about this bearish breakdown below this level of inflection dating back from November 2017, where buyers have defended this level historically. And guess what happened? You had a beautiful bearish Maravazoo that was immediately invalidated the following day with this Japanese reversal candlestick pattern, a bullish kicker, which then was validated by the following day with a beautiful upthrust in price, 2 green candles, beautiful, with your bullish divergence playing out after you had bearish divergence from one peak to the next, just ushering in more bullish divergence. Buyers are here, buyers are defending, and prices are marking up. You are seeing levels of positive momentum building on your MACD. You are in the bullish control zone on your RSI, and I've been talking about this probably for a couple weeks. The 4-hour, you do have this potential bearish shark pattern. It looks like the 886 is right there. Boom. All right, so it looks like this would be your pattern completion zone of the 886, which was around 44.15. You now have broken your B point. Beautiful. This now becomes a real possibility to complete this pattern if we stay above the B point long enough. You are in the bullish control zone, positive momentum continuing to build. Beautiful. Let's watch for more follow through next week. I do think next week's going to be very exciting. Taking a look at Apple on the daily. So it looks like you're going for your type 2 from this bullish bat, where we talked about price reaction, price retest of the pattern completion zone, price resumption reversal to the upside. You do have your hidden bullish divergence from your one low to your next low. I also wanted to call out, look how important plotting your key levels of inflection are. You held and buyers defended this area on October 13th, November 4th, and once again on November 9th. Having a stop loss and going long at this level is completely reasonable and makes sense, where one could take action with a stop loss just marginally below these levels, because price reversal can happen here, and did. And we've been talking about what happens between this range: straight up, straight down, straight up, straight down, straight up, straight down, straight up, straight down, straight up, straight down. What comes next? Straight up. So let's see what happens. Let's get back in this level of inflection. Let's get back above the 200 simple moving average, and let's get back above 156.96 to even consider this being back in a bull market. Remember, you are very bearish until you're not. You're in a downtrend, but you are getting bear market rallies. That's what's happening until you make higher highs. If you're not making higher highs, take profits. On Thursday, I was talking about how you could reasonably take a shot at Tesla, just having a stop marginally below 180.178, and you got your entry when prices fell back down to 182. If you entered here with a stop below 177 here, would be very great stop loss. You have bullish divergence from one low to your next, and you have hidden bullish divergence on your RSI. In between these levels, we spoke about what happens: straight up, straight down, straight up, straight down, straight up, straight down. Next likely target is 209.07, and your stop loss would have been slightly below this level. Now you can put your stop loss where you're break even or slightly in profit, and let it ride. If it gets stopped out, who cares? Move on with your day. If not, you'll likely see the top of the range if this bullish divergence does play out. Something I also wanted to bring to your attention was the 2-year yields. So from your previous discernible swing high to your discernible swing low, you have reached a 1.618 fib extension, where this is a definite premium if you were longing yields here, and where traders could definitely take a short just based on how much this has rallied. And look what you're doing at this level of inflection, where you have one high, higher high, higher high. You have 3 dives here. You have one high, lower high, lower high. And it's hard to tell. I'll pull it up here. But when you're higher high, higher high, higher high on price, you're making a high, a low, and a lower low, with negative momentum continuing to build. Prices around neutral on your RSI, but definitely a real level where you could potentially be back testing 386 or 3.695. That becomes a little bit more clear on the weekly. Looking at the weekly on yields, you'll see what I'm talking about here, where you have this level of inflection from 1998, 94, 92, to where buyers have defended these areas, and you've also found rejection here, 2002, 2007. So let's see if we can get a back test of the first level at 3.86. So what this is looking at is you have this bearish divergence from the weekly perspective as well on both oscillators, to where why not have a back test of 3.86? You haven't done it before, so let's see if we can back test it and probably go sideways for a while if rates are about to come off. I know it's a big call, but just looking at the technicals, yields, and you have this bearish engulfing candle on the weekly at a fib extension 1.618 with bearish divergence on 1, 2 oscillators. So you have 1, 2, 3, 4 bearish factors for this setup. This is a high probable trade to where you'll likely see 3.86 in time. One more I wanted to bring to your attention was Netflix on the daily. You do have this hidden bullish divergence from your low to your higher low to your low to your lower low on negative momentum. Negative momentum beginning to wane. You did have this bullish kicker with some beautiful follow through. Price is in the bullish control zone on your RSI. You will start to see positive momentum beginning next week, unless you just flush randomly black swan event. Unlikely, but you never know with these crazy clown markets. So let's watch for follow through again and start to see positive momentum beginning to build, and you'll likely see this gap fill in time. You're back above the 200 simple moving average as well, so you're doing all the right things on Netflix. Beautiful. Alright guys, thank you so much for going through the weekly recap with me. If you like what you saw, please hit that like, that bell, that sub. You'll be notified anytime I post a video. Please feel free to leave a comment below if there was something you wanted to see but wasn't shown today. I'll try to incorporate it next time. And please give me any feedback. I'll be happy to incorporate it. So until next time, thank you so much.